So today we're going to take a look at this indicator in TradingView for scalpers and swing traders. So if you're in one of these, if your trading strategy is scalping or you're a swing trader, then this video is for you. This is actually for Fibonacci retracement, but it's not manually drawn. It's automatically drawn by the robots in the TradingView platform, right? So I'm going to show you exactly how to read this indicator, how to work with it, and every single thing you need to know about this indicator, and probably use it for a more profitable trading opportunity. So we're also going to take a look at how it looks like on several other pairs. Like currently right now, we're currently in NZD USD. So we're going to check GBP USD, probably check out EUR USD, which I think will probably be the same thing, and check out some other, not so many, maybe like 3 or 4 different assets, because it's not really complicated. It's not going to take us much time to go through this. Okay, so let's go ahead and get started, guys. So before you get ahead and continue watching the content, if you're a person who enjoys this type of content that talk about indicators and how to trade, then go ahead and subscribe to the channel, because we also talk about those things in the channel at a large length, right? So go ahead and do that and give the video a thumbs up for YouTube algorithm, and make sure to share your opinions in the comment section. If you also have any indicator you want us to talk about, go ahead and leave the comment in the comment section, and we'll get back to it in our next video. All right, so now let's go ahead and continue with the content. So currently right now, this is how this indicator works, right? So the very first thing is that it's going to mark out a point of high. Now, when it marks out this point of high, it has to, go down and then retest it. Because look at the thing. So by the time before this high was accounted for, this was the previous high. So it needs to mark out the current high, then you let it go down, and then it has to retest it. So it can only retest it after a given period of time, and that is actually when it retests it and rejects that price. That is when you go short. So this is 2 main lines you're looking at. This white line over here and this white line over here. These are the 2 main lines. You're only going to remain in this market after you're already in profit and the market crosses this white line and still continues going up. For example, let's say you enter the market somewhere here due to the delay in marking out a new point of low, and then the market goes up. Probably let's say the white line then was here, and then it crosses that white line due to this huge push over here, and then you're still probably going to be in the market. You're only leaving the market when it retraces back to that same white line over there. So by this time, it's probably giving you another white line over here. So that one already has become invalid. You close out the trade and enter the trade, another one, a short position to the downside. Now, this particular strategy is going to help you a lot in mitigating risk, because you have a very low amount of stop loss you can put, right? So there are actually some settings you have to put out so you can be able to, follow the trading, much more closely than, than waiting out the opportunity to go ahead and pass you by. So the name of this indicator is called the Auto Fibonacci Retracement Indicator. You can find this indicator for free of charge in the indicator menu in TradingView. You can come over here and search for it, or just simply go through the technical indicators over here, and you'll find it not so far from here. You can see it over here, Auto Fib Retracement. That's it over there, okay? So now, once you've gotten this particular indicator in your charts, you can go ahead and do the following settings. You don't really have to do them if you don't really feel like doing it, right? You can. This one is already by default in 3, and this is going to be in 10. So we'll go ahead and change it to 5. You can take out this show price levels and show levels over here. You don't really need them because I know what they're trading with. So by default, they're gonna be on. So go ahead and off them if you don't really need them. And I already explained to you how this works, right? So once the market moves up, comes down, retraces, you go short. So initially we had this white line over here. It moved up and we're waiting for it to come down and retrace, but because what happened, it broke through. So it didn't actually retrace, it just broke through the line. So that shows us that the market is probably going to continue going low. And it did do that. And if you looked very well, you can see I put my setting over, my depth over here to 5, right? And the deviation itself is already with the follow column, which is the 3. So I'm just gonna leave that over here. So the depth, if you go ahead and look at the information over here, it says the minimum number of bars that will be taken into account when calculating the indicator. So it's just gonna take just 5 candles into account when it's calculating the indicator of to be able to figure out the new level of the indicators. So with this, we have 1, 2, 3, 4, 5. Already this is the lowest, so giving us the new level. So currently right now we're having a retracement coming up, right? So once this retracement comes over here and rejects this level, we go up, put a take profit over here and stop loss just below here, not too far away. That is after it has rejected. We're not going to enter the trade right now. This is 15 minutes time frame, so it's not going to take much for us to know if it's going to reject this. If this candle closes with this huge red candle over here, we still want to take the trade, because even though you're using this indicator to trade, you're also making sure to also include the candlestick structures. If you know about them, we have the engulfing pattern, we have a bullish hammerhead, several different candlestick structures over there to show that the market is actually about to reverse or go into the other direction or continue a particular direction. So you have to make sure to apply that over here as well. For example, this one over here is a very good candlestick structure for the upward direction, but due to the fact that by the time this candlestick structure forms, the white line is still at this range, so we cannot take that trade, okay, because this is still the lowest at the time. And for us to start calculating the next lowest, I have to start when the lowest has been broken, which is by this red one over here. So count that 1, 2, 3, 4, 5 according to my setting, right? Now counting this to five, this is the new lowest, so the white line is going to appear here. So the next time we have the opportunity to take a trade is when this particular one has been rejected, which it looks like it's being rejected right now, but we'll have to wait for the timer to finish. Then if it's actually rejected, then and it's still favorable to us actually, because sometimes if you reject, it's already gone too high, and then we'll have to sit out that particular trade. But if it's still favorable to us, reject at a good price, we go ahead and enter the trade going up to the upper direction and our stop loss just below, so we can be able to catch this trade to a proper profit. Now here's another thing: if this particular market breaks out but quickly rejects, we are still going up, because what it means that it has already cleaned out stop losses. That is even a more powerful move for us to make and go to the upward direction. Quickly, let's go ahead and see how this looks like in GBP USD. GBP USD over here, and we'll go over here and see what it looks like. So you can see clearly the same thing is happening. You can see over here, market rejects. Let's see. Let's see over here. So it broke out around this place. So I have to count it 1, 2, 3, 4, 5, and reject. You see this particular green candle over here. You see the structure. That is what we're looking for. And then boom, go short. And so what happened? Take profit hit. And then it comes over here, and now it's rejecting. If it rejects again, boom, go up. But I personally will hope that this market comes out, breaks through, and quickly returns back before the line moves. Because if it does that, it shows me that stop losses have been hit and I'm ready to take profit. That works pretty well in GBP/USD. Let's check something like EUR/USD, which I think is going to be the same thing regardless. So let's see EUR/USD, and you can see EUR/USD. You can see what I'm talking about. It's almost breaking it through. Although I'm not satisfied with this breakthrough, but I hope it actually just maybe break through more in the same candle and then returns back, so can actually be able to go upward direction with full confidence. Now this is actually a rejection, but I will not take this trade because where it happened was already too far. And even if you have to look at it over here, the breakout happened over here. So 1, 2, 3, 4, 5. So this white line appeared after the market has already hit here, so it's not a valid trade for us. So we're gonna have to reject this particular one. So let's see what happens in one other pair before we just go ahead and end the video. So let's see something like let's check AUDCHF. That's Australian dollar to this Chinese currency. Yeah, so it also did, respect the markets, but look at the previous high, right? I think this should be where the previous high was marked. I think where it should be marked, right, because of this. But in case it was marked here, then we wouldn't have taken this trade. But if it was marked here, then this trade would have entered it, because you can count the candles that followed that up after the breaking through. I think it was up to 5. But still, there is still no profitable retracement. The retracement only happened here, and it's too far from here. So I probably will not take this trade. So still, I will not take this trade, okay? Now, I might take this trade if the market returns over here and rejects. Then I'll take the trade, just like we saw in the other ones, okay? So like I told you, not every market you see I can't be able to take the trade with this. We are trading with the specific conditions to make sure we risk small every single time and win big every single time. That is these conditions we're taking. So even if you're not able to catch a particular trade, just leave it, look for another one. There are tons of fishes in this particular sea over here. What do you think about the strategy? Does it make sense? If it does, go ahead and give the video a thumbs up. I'll see you in the next one. Take care.